Dan, great to see you. Thanks so much for joining us.
My pleasure, Wilfred.
What do you think of the latest little bout of volatility? We're still obviously fairly close to all-time highs, but are you concerned that there's more selling to come in the short term?
Yeah, I mean, we've been pretty consistent all year that our feeling was the market was up as much as it was because of stimulus. When that stimulus had to get removed, with the market cap of the entire stock market divided by GDP sitting at 1.9 times, which is an all-time record. By the way, the peak of the tech bubble was 1.4, that valuations would come down pretty hard, especially as the Fed was forced, kicking and screaming, I think is the phrase I used 2 weeks ago when asked this question, to raise rates next year. So I firmly believe the S&P is down next year as valuations come in and growth expectations get tailed back.
In terms of how you're positioned, we know you also always have some long positions, some short positions, and you can hedge that way. But what about your cash position overall? Is that elevated compared to normal at the moment?
Oh, absolutely. I mean, my favorite investment idea right now is cash because in this environment, if you look at the market, a lot of the value stocks have gotten absolutely killed. The Russell 2000 is down 12% from its highs in, I think it was November 8th. So underneath the surface, you know, people are focused on Apple, and that's great. But underneath the surface, there's a lot of damage being done, and people are just continuing to crowd into some of the biggest names. But, you know, there's a lot of data points coming out, even over the holidays, that demand for some of the biggest names may not be so good. I mean, there have been several companies that have come out and said e-commerce sales, you know, are pretty flattish, which would be the first time in history over the holidays. So there's a lot more evolving, if you will, of the narrative that still has to happen as some of the pandemic beneficiaries, you know, continue to slow down in growth. But at the same time, a lot of the value stocks, there's just no bid for them because going into year end, everybody's either window dressing or tax loss selling. And so they're going down even harder. So that's why cash right now is literally my favorite position to be in. And we have some in the fund for that very reason.